Okay, right. So buying, selling, and taking profit. So basically, as I've put here, basically, especially when you're starting out, you want to keep it absolutely as simple as you possibly can. You don't want to get complex. You don't want to get ahead of yourself or try and overextend yourself and get all fancy and try and take on too much. At the beginning, you want to understand the principles, the foundations, the fundamentals, and it's very important to understand the wider context of what you're getting into, and you want to understand the market in its larger picture, in the macro picture, before you start drilling down and buying and starting to, especially when it comes to trading or taking profit. You've obviously got to, some people here haven't even really started yet. Other people have got a portfolio. So obviously I'm talking to different people at different stages of the game, but I'll try and cover the whole breadth of things so that everyone gets a bit of a taste of what I'm trying to say. So one fundamental you've got to understand is everything moves in cycles. It doesn't matter whether it's natural or it's man-made, it's financial. You'll see the stock market, the rising and falling of prices in every area of the financial system is a fact. And even though some say there's manipulation going on, and there is manipulation, the market will always seek its own level. In other words, it will always come back into balance. There is a certain free market aspect that's at play here, because people move in herds, people move in packs, um, even with the manipulation. It can't stop the sheer volume that's going through. Um, you can't manipulate everything. So even greed is a cycle, because greed will then correct itself back to um, the, what would you call the opposite of greed? I guess fear, basically. So we've got to understand that there are people's emotions at play here, and ultimately everyone is guided by the same basic fundamental principles of survival and also a desire to thrive, if you like. So the key is to know where you are in the cycle. And in the crypto market, it moves roughly 4-year cycles, 2 years of a bear market and 2 years of a bull market. And within each of those 2 years, you're going to have ups and downs in both sides. It's not a perfect straight line up and a straight line down. It doesn't work like that either. But the fundamental trend is 2 years of up and 2 years of down, or bull and bear. And this is based around the Bitcoin halving, what they call the Bitcoin halving, where every 4 years, the amount that the Bitcoin miners can mine is cut in half. And because Bitcoin is the lead, it's basically the big daddy of the whole crypto market. You could say that Bitcoin is the reserve currency of the crypto market. A lot of things are often priced in Bitcoin against other what they call altcoins, which is just short for alternative. So Bitcoin is kind of leading the market, but there's other factors at play as well. Obviously, there's many other factors at play: the liquidity cycles, money that's just money printing, debt cycles, what's happening in the crypto market with the development, narratives that are put out on mainstream and social media. Basically, so many things. There's so many things that are affecting the market. But generally now we are just entering into a new bull market. It's sort of on the up. And this trend is likely to continue for at least another 18 months. But bear in mind that we have entered into this bear market a little bit earlier than normal. Normally it comes after, just after the halving. And in this case, it's come just before the halving. And the halving is due for the end of April. So we're a couple of months ahead of the cycle, 2 or 3 months actually. The bull market actually started sort of in earnest around late January. So yeah, so it looks like the cycle might readjust, might go to a 3-year cycle. We don't know, but basically the next 18 months, it's going to be generally, if you follow the past trends, the next 18 months to 2 years is going to be up in trend. Ethereum is the number 2 token. It has a completely different use case. It's like they call it the EVM, or the Ethereum virtual machine. That is like a computer within our internet, and it's based on what's called smart contracts. So that basically is electronic contracts that that enable people to do a lot more functions. And that's something that we can go into at another time for the new people here. That's something that we can focus on in another presentation, or we can do, because I've noticed a few newer people are coming in. We can start doing a basic course at some stage soon for all the newbies. So Ethereum and the other tokens are known as the altcoins. So Bitcoin tends to start, then Ethereum starts to ignite. And then what happens is all the other tokens start to come alive as well, as they're starting to as well. And this is simply because people are taking profit in Bitcoin, they're taking profit in Ethereum, and then they're moving that money into the cheaper tokens, looking for a better return. Basically, they're just looking for a return. So yeah, and basically Bitcoin is starting to become quite mature as an asset. It's maturing now that it's got this ETF. And again, that requires a whole lot of conversation. But basically, Wall Street now are buying shares. They're buying a derivative of Bitcoin. They're not buying Bitcoin itself in the ETF. They're getting the profit that has been made on Bitcoin. So yes, so that's really just how BlackRock and all the big hedge funds now they've got their greed factor has now come into play. So believe it or not, most money is made when you buy, not when you sell. You buy, generally what the smart investors do, and this is not financial advice, of course, I'm not a financial advisor, but just following this is a standard procedure. It was always drummed into me when I was buying property. It's drummed into a lot of people when you're buying any asset, is if you're buying it in the down market, that's when you make you're making the money, because if you're following the trend, then you get to sell at a much higher profit margin when you get to sell. So that you're making the profit when you buy, but you're not realizing that profit until you come to sell. So the idea is to buy in the bear market, or buy the dip, as they say, or when the token that you're specifically looking at is, if it's historically cheap, and you completely believe in that, in what they're doing, and it's a blue chip token, then you can just analyze the chart. You just go to the website CoinMarketCap, which I will go into soon, and you can get all the statistics on all the tokens in one website. And it's a huge website. It's one of the most viewed websites in the world now. So basically, you could say now is a pretty good time to buy, because if we got 18 months of upward trend in front of us, it's not a bad time to get into the market. It's only just starting. It's only just starting to move now. And it's very important to analyze the charts. Obviously, the charts tell the story. And then, the theory is then you take profit in the bull market. However, that depends on what your strategy is. Some people might be just buying to hold. You don't want the hassle of watching the market. You've put your money in on your token, and as long as it's something that you believe will be around for a while, which we kind of try to help teach you, you can just forget about profit taking and just hold for the long term, because this is a long term play happening here with crypto. It's really just starting, even though it's been around for like 15 years. The masses haven't woken up to it yet. There's still only 7% of the population involved. There's about 94% that are not in the market. So yeah, it's very early. And then you've got this thing of time versus money. I mean, if you've got the time, you might want to get more involved in buying and selling and trading, and you might want to hold a bigger portfolio. But I suggest that you work towards your time constraints and how much time you're willing to put in. It's very important that you do a bit of your own research. Even coming here is great. It's a great start, but I think it's also good to do a bit in your own time. Crypto is tricky. Any investing is tricky. There is a lot to learn, and but if you get the basics down, you do the basics right, you should be okay. But you're bound to make mistakes. We just have to hope that those mistakes are not going to cost you dearly. You just want to make sure that you're minimizing your mistakes and maximizing your upside. So we also believe it's very important to diversify. You can diversify across different tokens or different coins, but I think it's as important to look at the particular use case that the token has got, and then diversify across the different sectors of what the token is actually trying to achieve. Every token, just think of each token as like like a share, or like the currency for that particular project. So that's how blockchain and crypto is changing the game. It's basically businesses are getting built online now on the blockchain. They're not getting built in bricks and mortar. And these businesses are disrupting the old businesses, those old school businesses, and basically a whole new use case is springing up, and a new way of transacting, a new way of investing, a new way of living and working and playing. And so these the tokens are basically a token of that. It's basically a token issue of that project where we get to have a share in what they're doing. So you got to bear in mind, these are startups. Some of them are a little bit more developed than others, but ultimately they're still startups. And so you've got to, that's another reason why you've got to do the research. And even though they're called cryptocurrency, often the term cryptocurrency, most of them are not global payment currencies. There's only a few of those. There's gaming is huge. Millennials are driving this, so gaming is huge. AI is very topical right now. AI tokens. They're literally creating, using blockchain and integrating it with AI. So the AI is sort of being built upon the blockchain to give it the security and the safety and the decentralization that they're going for. Basically, the blockchain is providing a trust layer for these projects to build upon. Then you've got what's called layer twos. Layer twos mean they are projects built upon Ethereum or other layer ones. Ethereum is a layer one because it's a baseline project, and then other projects decide to use the Ethereum code and they build their business on top, just like you build multiple stories upon on a high-rise building. You've got all the different stories. In a way, there's a similar analogy to what's happening here, but in a digital way. Businesses are building upon a ground floor, kind of business. And in this case, Ethereum is, as it's a smart contract based, they are the ones that the businesses build upon. Also, Bitcoin is a layer one as well, but it has a few different other. It's obviously got a few other different twists on that. So yeah, that's a whole presentation in itself. So I'm just trying to give people just a basic outline of what different use cases there are. Real world assets and tokenization is another big one that's becoming very popular, where basically real world assets are now being digitized and put on the blockchain. So it's a proof of ownership. So that's what it is. Instead of having a physical title to your property, you have a tokenized, your property becomes tokenized and you access it on the blockchain. And this makes it easy to be moved, sold, bought and sold. It means that if it's done right, if it's done decentralized, then it's protected, and then you can dispose of that asset or whatever it is very, very easily. Then you've got another thing called DePIN, which stands for Decentralized Physical Infrastructure Network. These are projects that are disrupting all kinds of physical telecom businesses. Computer storage is huge. Cloud storage. We've got cloud storage now. It's going to blockchain storage now. And blockchain takes a lot of computing power. So there's a lot of projects that are providing services to fill that gap. You can now get a modem in your house, and you can literally link up a Wi-Fi network using blockchain. there are phones coming out preloaded with the blockchain in it and tokens in it. There's so many things that are happening in this area. Yeah, so basically, I'm not sure what I was meant. Didn't finish my sentence down here, but I was trying to get to remember something. But anyway, I'll just move on. So diversification often leads to specialization. So we start off with a bit of a diversified portfolio, but the very savvy investors tend to want to narrow that down into specialization, where they just put their tokens on one or two, or a very, very small quantity of tokens, and basically put all their money onto one or two. That's what Raoul Pal does. I mean, but that's fine for him because he's been in the game a long time, and these experts, they know what they want to put money on. They've probably got inside knowledge. We don't often have that. So to start out, I think it's very important to have a bit of a diversified portfolio. And then and with guidance on that as well. But if you're too diversified, I don't suggest you put $100 on 20 or 50 tokens, because then it's gonna take a lot of time to manage that. Maintaining that takes a bit of time with crypto, especially in the early days, because everything is changing. Wallets are getting upgraded. There's you've got to manage your tokens because changes happen to the project, and you've got to move them to here. Sometimes, I mean, it's not all the time, but certainly in these earlier days, you definitely want to allocate some time to get to know what you're dealing with here. And so don't go too wide, but don't put all your money on one token. That's not a good idea. So yeah, you can specialize when you're fully confident. And even myself, I'm not at that stage yet. I'm quite diversified. So yeah, only invest according to your capabilities, as you say, your time, and the knowledge that you've gained upon that. Got to have some. Don't just gamble your money. You want to put it on something that you've got some understanding of what it's trying to do in the real world. Otherwise, it's gambling, really. And this is why I stay away from meme coins. There's a lot of tokens that are making a lot of money, but they could be gone tomorrow. They don't have any underlying use case. They don't have any functionality in the real world. They're just like a casino, basically. And so I'm not going there. But there are a lot of people that are making money on them. But there's a lot of people, I bet a lot more people losing as well. So stay away from high risk projects unless you have the money to lose. Unfortunately, you got to basically, whatever you put on this, you've got to be able to afford to lose this money, because I've seen so many things go down. It's getting better now, but it's in the past, man, it's been a lot of damage. Yeah, so lower the risk often means the lower the return on investment. But the return on investment, it's all relative, and even the lower return on investment in crypto is usually a lot higher than anywhere else in the market. But if you're going to go on a very obscure token that's a very, very tiny price, and it's, bearing in mind it's only just starting up, you might be lucky and catch it. But yeah, you're more than likely going to lose your money. And so if you are putting your money on those very, what they call small caps or very tiny price, then you really have to watch what the market is doing. Otherwise, you'll just lose your money. So I don't recommend anyone here goes into those unless you're prepared to devote the time. Time in the market is much more important than timing of the market. The longer that you are in this market, the better your chances are it's going to give you some money at the end of the day. So there's people trying to time the top, they're trying to time the bottom, they're trying to wait till they get to the absolute bottom to buy, they're waiting to the absolute top to sell. And what a lot of people do is what they call dollar cost average, where they put in a little bit of money graduated over a time period, and that tends to be a much safer way to go. But the longer, if you're in, like I've been in with tokens that have been around for 6, 7, 8 years, and they're still going. And so that's a great sign that they're standing the test of time. They're building, they're developing like crazy. We look at it's another presentation we can do, but how to analyze a token, which we recently did. It's very important as to how you analyze what to buy. And once you've made your decision, then the matter is just to hold on and just and the longer it goes, the more chances it is it's going to be successful. Because crypto is still a very emerging, asset class, but it's fast rising, and it is about to burst onto the mainstream once they're ready. And so what we're doing is we're getting in before that mass adoption phase. So that we've got to bear that in mind. You're getting in at a very exciting time, but also it can be very risky because we've got no regulations to protect us. If you lose your money on a token, there's no company to run to get your money back. You can't just email support, and sometimes you do get support, but you don't get your money back if you lose your money. So there's no guarantee, there's no insurance, although that is happening. That is starting to happen. They're starting to, you can get insured crypto if you go through a broker, a registered broker. But if you're holding your cryptos in just a standard wallet, you've got no insurance. So you've got to bear that in mind. So basically, yeah, so now is a good time to get in, but don't rush in. Don't rush in before you've done at least some research. If you're starting out, what would be a good beginner's choice? And now this will be open to much debate. There'll be a lot of people that will all have different ideas about what would be a beginner's choice. But I've seen a lot of portfolios of others who have been in the market a long time, much longer than me, and they've come from an investing background, they've come from a financial background. People like Raoul Pal, who's come from Goldman Sachs. There's a lot of venture capitalists coming into this market now, and I subscribe to their their emails and their account, their info, and I've seen what they are buying and what they're holding in their portfolio, and it's invariably Bitcoin, Ethereum, and then I would probably go for something like XRP or Theta or Arbitrum, Chainlink. These are all quality projects. But now that Bitcoin is getting up to its all-time high price, a lot of people are not so they're not so interested in it. It's all well and good when we were buying it in a few $100 and $1,000, but now it's 62,000. But it's obviously becoming a genuine store of value, and it's a lot safer. So some people might be quite happy to buy a bit of Bitcoin, because I think it's still going to go over $100,000. It's not financial advice, but I don't know what its long-term life is, but I think it's got a few years of run yet before it really starts to plateau off, because of the ETFs, because Wall Street is only barely just getting in now. You know, but again, this is the risk that we take. So then a lot of people also hold Ethereum. That is the second main token that I mentioned. It's the smart contract enabled. It's a layer one so that other businesses can build upon it. But again, a lot of people say, no, I'm not so keen on Ethereum now. I'd rather go for a layer two, which is Ethereum based, but it's a different project. It's just using Ethereum as they've done a lot of the hard work with the base code, and then these other projects build upon it, and then they create their own specific project. And Arbitrum is one of those. It's a very good project. It's very fast and much cheaper than Ethereum. And then you've got like Chainlink, which is like it's creating an interoperability. It's infrastructure token that's enabling all the blockchains to come together, to work seamlessly together, because that has been a problem where different blockchains have been like islands. It's been very difficult to transact. XRP is a global payments currency. It's always been one of my favorites, but it is a longer term play. GameSwift is an example of a gaming token. The millennials particularly love that. Quant is another interoperable token that's it's bringing traditional finance into the decentralized finance world. That's what it's predominantly doing. There's quite a few others that are doing that. And Quant is one of the main ones. Theta is video. It's integrating AI. It is a decentralized physical infrastructure, and that it's dealing with AI and video streaming. So it's providing the blockchain services for these kind of things to happen. But Theta it's a very complex project. There's a lot to it, but it's an incredible project. And I've been involved in Theta for a few years now. And Aave is an example of decentralized finance, lending and borrowing on the blockchain, basically, where you can stake your tokens to earn a passive income. But it's the big time involved in, it's like the kind of like the stock market of decentralized finance. It's kind of like the stock market on the blockchain, but with their own flavor. But they're also lending and borrowing. We can lend and borrow our tokens. In other words, we can earn a return from lending out our crypto to other people, and we get in return, the Aave facilitate that, and the people must put up collateral. Everything is collateralized. Everything's backed by something generally. Or at least that's the way you want to do it. So if you lost your money, there's a smart contract that ensures that you get your money back if they went bust or something. So there are some great stopgaps and fail safes in here where you don't get in the existing centralized system. If you lost your money, you lost your money. Too bad. And there's no real backing. There's no backing to the fiat currencies. There's no backing at all to our current currencies. And, even with our banks, it's questionable whether we're going to get if a bank goes down, we may well lose our deposit because let's face it, it's not our money anymore. So when it comes to profit taking, there's lots of different ways you can go about it. You could set a percentage of profit to take when the token reaches a certain price. You might say, okay, well, when I bought this at $1, it's now at $5. I'm going to take 20%, or 30%, or 50%. Or you might want to sell the whole thing. You might want to decide, nah, this token's not going any further, and I'll take that profit and put it on something else. I have a strategy where I've got tokens that I'm buying for the long term and I won't be taking profit on, but I buy tokens purely for a profit play. And I've started buying them now with this bull run coming, as we've got the timing right. And I intend to take 100% profit on some of those tokens. And I will do that. As you follow the market, then you'll start to get a read on when that might be. But I certainly won't be doing that until after the halving, which is late April. And then from then through to about, throughout the rest of the year, it's basically a matter of watching what's going down and then taking profit when you feel it's getting too hot. And we can go into a whole presentation as to when how do you know when the market's getting too hot? And there's lots of indicators that we can get to show you that. You might want to just buy tokens to hold long term, and you not even want to think about selling or taking profit. It's too much work. So yeah, that is one way you could do it if you wanted. But as I say, I think it's good to have a bit of a mix. You might want to just set a dollar value, like that if you are going to get X amount of dollars by taking the profit. Yes, because say you want to buy a new car and say you've made, maybe say you made $20,000 or $30,000, you think, right, that's enough. That's the target I want. That's what I need to buy my car. So I'm going to take profit. So you don't even have to look at everything in the market. It's just your own personal goal, and that's good enough for you. And I wouldn't suggest doing that on your whole portfolio. You might want to do that on one token or two tokens, but I don't think it's a good idea to take 100% profit across the board, because you're only going to, then what are you going to do with the money? I mean, if you've got nothing that you need it for, and we've got to keep some powder in the game. You've got to have something in the game because crypto's just starting. So I don't suggest you pull everything out, because you're only going to have to start again. And you've got to figure out what you're going to do with it. You might want to take profit on a spread. So say if I've got 5 tokens, I go, right, I'm going to take 20% off the top of each, and then leave 80% in. That 20% profit could be, quite a bit in time, as things move fast in this market. So that's just some ideas for you as to how you might want to do it. Then the other big question is, well, where do you take profit to? Because we're kind of trying to exit the fiat currency. We're exiting the fiat system. But if we're taking profit, it doesn't necessarily mean you're taking profit back to fiat, although you can do that as one way of doing it. What a lot of people do in the crypto world is they take profit to what's called a stable coin. And that is simply a digital US dollar. At the moment, they're just US dollars. But I know that New Zealand's stable coin is already, I believe it's already out. It's already been tested. It may not be out to the public, but I am going to a presentation has been put out in May that I'm going to go to about the New Zealand stablecoin. So that's going to be really interesting. So what you do is you can just do this in your wallet. We can show you how to take profit, but you can by and large, you just can do most of it. You can do it from your wallet. And that's going to entail another presentation. But basically, yeah, you just sell what you want to sell to a stable coin, and then you either can keep it there and wait to buy back in, and you wait until the market will drop, and then that's what a lot of people do. They take profit near the top, they watch it drop, they then buy back in, and then it goes even higher, and then they do it again, and they just repeat the cycle. But you've really got to know what you're doing, and you've got to really understand your token and the cycles before you get to that stage. So, but I'm just giving you an idea what some people do. But if you're going to exit, where are you going to exit? So there's really only two ways to exit. You're either exiting to a card, and then you can spend the crypto, and there is a couple of choices there with plenty more coming. There's a whole queue of them starting to come in a card. But I do spend my crypto on a card now. Or you can take it to fiat. If you really want to take it into fiat back to your bank account, you do it through an exchange account. But I'm very, very wary of doing that. I know for a fact someone who took $8,000 of his crypto back out to his bank account, and then the bank froze his account and accused him of money laundering. And so that is a big danger there. Because the banks hate crypto. So if they make an example of someone, they will. So that is a real key danger there. So that's why I think it's a lot safer to take it to a card. And then my card is it's not accepted at every store, but most stores, because it's an international card, most stores will accept it. And I can do my shopping. I paid off my own car using my card. I paid for my room at a recent holiday little break we had, and I go down to my local store and I buy my milk and bread on my crypto card. And so I buy my fuel using it as well. And just there are the odd places that won't accept international cards. It starts with a 6, not a 4 or a 5. So, but there are solutions coming very soon with our Trustify Bankless Bank, and I know there's a couple of others that are waiting in the wings as well. Also, if you're taking profit to fiat, you're immediately triggering a major tax event as well. So that's another thing that you're going to have to consider. When it comes to tax, and you need to seek advice on this when it comes to the time, but this is just the way I understand it. Crypto is treated as property. If you just buy and hold it and don't touch it, you don't do any profit taking, you don't do any trading or anything like that, then it's seen as property. But when you trade it, or you say swap a token for another one, and then you start doing it a few times, then that is seen as realized income. And even though it's only might be realized in the crypto realm, they'll still want to know. They still, if you got audited, they would see that as realized income. And I do not like the tax department. I hate the tax department, but I have been audited before, and I tell you what, that was a pretty horrible experience. Wouldn't wish that on anyone. So this is what we've got to be careful. It's a very fine line. It's a dance between trying to do what we know ultimately is right, and also dancing between the authorities and what they think is right. And it's a very fine line. So, I do think that the tax department, by and large, they haven't got the resources or the time to go around and audit us. That would take a huge amount of time and resource. I'm not advising anyone to avoid the tax department, but I know they're going to have their hands full, and I know that they are working on a global harmonization of tax. They're coming up with some tax laws within the crypto sector, not until 2027. So I think we've got at least a couple of years to try and figure out how we're going to play it with this whole thing, taxter thing. I always believe it is good to hold some crypto in a stable coin, because if you get a good tip or you see that a token has got to a very affordable price, it's just good to have some dry powder, as they say, on hand to deploy. But yeah, obviously when you're starting out, you might be just content just buying and holding. But as you go along, you can start getting a bit more confident on these things. You might want to take profit to reorganize your portfolio. You might think, oh, this token is going nowhere. Maybe it's had some bad rap, or the competition is quite fierce in crypto as well. And you might see, you might still be up, and you think, okay, well, I'm going to cut my losses, or I'm going to take a lesser profit than what I wanted, but you're getting out before maybe it plummets, and but you see another token you think's got better prospects. So you might want to rearrange your portfolio a bit with some newer tokens. And don't FOMO, and really do not have this fear of missing out. Don't throw your money at it. It's a real danger. There's always new projects coming through, and there's so many opportunities that the part of the problem is figuring out which one to go for. So don't feel you're missing out on anything, because there is so much yet to come. I mean, you got to remember also that a profit or a loss is only realized when you sell or exit. Numbers on a screen is not realized profit or loss, so except for the tax department. So, we've been in a number of projects, obviously, and we had our account, and we said, wow, this is how much we're making, and it's all amazing, and we're getting all excited. And then next minute, when we try to withdraw it, we couldn't get it out, or there's a problem, or there's some kind of glitch, or it turns to be a scam or whatever. So it's not realized profit until you actually can exit it out. But the same goes for a loss. You might look at your wallet and you think, my token is really down. I mean, you might have bought it in the peak, and now we're in a bear market, and it's like looking really, really sad. But if it's still a token that you really believe in, and all the information stacks up, don't sell it. wait till the next bull run comes. I've done that, a few of my tokens, I've been well down, and then I've just waited now, and now I'm back in profit, and I didn't sell at a loss. So that's another thing to consider. I'm talking here about the mainstream crypto market. I mean, we are in other projects, other sort of crypto-like projects where we're not actually buying crypto on the open market. They are a different proposition again. And as we've now really learned, the risk in those are way higher. And so I don't recommend anyone go into a any kind of crowd-funded multi-level marketing project. I'm actually kind of decided I'm not going into them anymore. They've just been too painful, and just about everything, well, not everything, but a good 50% of the projects I've been in have gone, where I would much rather put my money in on some of the tokens now on the open market. So infrastructural projects, fine. Projects that are well set up, that's fine. If they've been self-funded by others, not by us, that's better. And they've got to have a real good use case, got to have a good community, but otherwise I would just steer clear of it. If you're not sure, then don't do it. When it comes to trading, I mean, I'm not a trader, but there are traders out there who like to day trade. They're trading all the time. They're trading across the markets. They're buying and selling, and you can do that from an exchange account. It's not my thing, and I don't think many people in our community are into that. We have gone into a few projects where they are the traders, and then we get their profit. But again, that's quite high risk. You're using a third party, you're putting your money into someone that you don't know what's going to happen. And often it's not just the people. The people might be fine, but it's getting the money out again because of the banks. The banks have shut down so many projects that are dealing with crypto. It's just insane. So that's another major danger, is a lot of these projects have got nowhere to bank, or the banks have pulled the plug on them. And so that's another big problem. What is a lot easier is swing trading. So swings is where you buy in a token, you buy it with the idea of you're buying in at the bottom of the market, and then you watch it go up, and then you take profit, and then you rotate it into other tokens that are just coming up, and people are swinging from this token to that token, buying in the dips, selling in the peaks or on the upswings, and then they're constantly then over a period of weeks and months, or maybe usually within that sort of time frame, people are swing trading, and I've started doing a little bit of that, and that can be it's not as onerous as day trading. You don't have to be glued to the computer. You don't have to know the markets inside out. You just have to know the cycles. You've got to do your research on the token, and then you can, and there's quite a lot of people that do very well with swing trading. Or you might just want to do no trading at all and just take the occasional profit. That's perfectly fine too. It depends on your personality and what you want to do and your time. Or you might just want to be no trading, no profit taking at all. You've got sufficient resources, and you just want to hold for the long term till mass adoption, till 2025 is when it's really going to start happening big time. We're just in that preemptive time before that. We're just in the early stages of watching the masses starting to come in now with the whole Bitcoin thing leading the way. So now is a good time to buy, because you don't have to hold, like I've been holding tokens for 6, 7, 8 years. And I haven't taken profit, and I thought I was just buying to hold, and I held and held and held, and it's been quite a long time in the desert, I have to say. So, but now, we're getting much closer to that all-important mass adoption. As the old system's collapsing, it's got to move, and it's going to be blockchain based. It's going to be a blockchain based system we're moving into. There's going to be digital payments. It's going to become commonplace. And it's just a fact. So we are well placed. If we're sensible, we can make good decisions now, and you can protect the money that you've got. It's not even about necessarily making money for a lot of people. It's just about protecting what you've already got, your nest egg. And so basically, buying and just holding might be your way, because then you don't have to do nowhere near as much work, if you like. I also suggest you study the macro narratives. There's the big narratives that are out there on social media and out on the mainstream media. They are constantly shifting, and so you need to be up the play with what's happening. If you really want to get into crypto in a bigger way, you've got to know what's happening with the narratives. What are the mainstream media saying? What's happening on? They've got channels in America pretty much dedicated to tech stocks and crypto. CNBC is one. Another one's called Squawk Box. And these are they talk about stock market stuff, but they talk about crypto a lot now as well. And, a lot of it is garbage, but in between that, you get to hear what they're promoting and what they're not, because these guys are paid off. So basically, like right now, AI is very hot. Gaming is becoming very. So those are obviously the tokens you might want to look at. Storage, computing storage, is also very hot at the moment. The entire market is shifting like quicksand. Just block out the noise. Don't read mainstream news except occasionally, just to have a peek at what they're saying. But if you can avoid it, just don't bother. And try and watch at least one video every other day if you can, to stay up to date. And don't follow people who have not had sufficient experience or time in the market. Be careful who you listen to on social media. The social media particularly is just full of absolute rubbish, mostly negative towards crypto, or it's extremely FOMO based. It's very, based around just hype. But there's a lot of negative stuff out there about crypto, because people really they fear this technology. They fear what you don't know. They fear losing cash, which is fair enough. But at the end of the day, this is coming whether we like it or not. So we've got a choice. We either get on the train and try and learn it now when we've got a good chance before it really explodes, or we just ignore it and continue to ignore it and take your chances on the other side. And that's really what it comes down to. So basically, just to finish off, because it's had been a bit of a longer one today, crypto is basically, you should have got the message by now. It is not easy. It is not easy at all, but it gets easier the longer you are in the market, and the more research you do. Never invest what you can which you can't afford to lose. Sorry, it should be not can. It's whoops. That should be can't. Whoops, sorry. Anyway, don't listen to that. It's what you can't afford to lose. Invest according to your knowledge. Always seek advice from others who have been there and done it. And I mean, there's other people way more involved and more experienced than myself, that's for sure. I'm not by any stretch of the imagination reached anywhere near where I feel like I really have got this fully sussed. Often people who have had big losses or made big mistakes, they can be great people to learn from. Sometimes, those hard falls, people learn really well. But also sometimes that can make them totally blind to, it can make them fearful of not even going back into the market in any way or any, any good way. So also you've got to also be mindful of that. But people who learn and then move on and then really rebuild, they're quite inspirational. There's quite a few people I've come across who've done that. Be mindful of security at all times. Absolute and basic security in crypto is a VPN, encrypted password manager. These are absolute musts. You don't want your IP address appearing when you're doing searches of crypto, because that makes you very vulnerable to the hackers will know your IP address and they will target you. So that's why a VPN is very useful. As I mentioned, stay away from multi-level marketing projects that are full of hype, or the pure startups where they basically are using our money to get going, unless you are 100% certain that they're a good project. There are some good ones out there. I just prefer, in my position, to stay away from them now, because they just taint everything. They just leave a bad taste in my mouth right now. Watch where the big venture capitalist money is going. That's a really good way. There's some big ones out there who they can be quite candid with what they're investing in just by being on their newsletter. And if they are putting their money in there, I mean, that's a good sign that it's a solid project. And some of them are called Andreessen Horowitz is a big one. Sequoia Capital is another one. A16Z, Pantera, Masari, and Bankless. These guys are what they call the OGs, the original gangsters in the crypto market. They've been in it right from the beginning. They were buying Bitcoin quite often in the very early stages and have made huge amounts of money, billions, and now they've set up these basic venture capital firms where they just invest in other up-and-coming crypto projects. So I follow what they do, and then I do my research, and that's a great way to know how to choose a token. So basically, that's my presentation for today. Sorry, I've gone a bit long today, but
Sorry, Tony, do you mind just repeating